Hi, Greg Burns from IPX. I wanted to make a quick video to talk about banking. And you think, well, banking, QI industry, how is that, relevant? Well, when the exchange company is holding on to your funds, they basically are putting it in a bank, or they should be putting it in a bank. And what bank they put it in, are they investing the money? Are they, keeping it safe? All of those things are very important. So, when someone opens an account with us, we open a for the benefit bank account for the customer. So we're kind of acting as a custodian, but the client still owns the money and they earn interest on it, and that interest is accrued. They can take that as cash at the end of the exchange, or they can also, send it over to the replacement property, but they are going to be 1099 for that interest income from the bank. And so the other thing that's significant is who they bank with, right? So we bank with, for the largest financial institutions in the country. We do that because we don't want them to ever put the money at risk. We basically try to bank with what we believe are banks that are too big to fail. And so, all of those things are important. Segregated accounts, are also really key. There was a case that happened a while back where, a large exchange company went out of business. The bankruptcy, the way that the funds were held, they were held basically in a master account with a bunch of individual accounts underneath it. And then initially what happened is that the bankruptcy trustees argued that that was money of the parent company, not individual exchangers' money. And so we spent a lot of work working on making sure that our customers were protected from potential bankruptcy if, in the unlikely event, F&F were to ever file for bankruptcy. So if you have any questions about banking issues or about safety and security, don't hesitate to give me a call. I always look forward to talking to you, and have a great day.